This is Opening Moves on NDTV. Profit the market. The Sensex, the Nifty can't make up their minds perhaps, but there is traction in some stocks. Royal Orchid Hotels is one such counter. It's up 1.5% right now, but if you take a look at how it's performed over the week, well, it's up 15%. What's going on at the company? Joining us now to answer that question is Keshav Balji, Vice President, Royal Orchid Hotels in our Bangalore studio. Keshav, good morning. Thanks for making the time to be with us. I think the first point of interest is the property that you have acquired in Powai in Mumbai with plans for a 4-star hotel, 260 rooms. Run us through the numbers on that. How much have you put aside for developing that project? What's the timeline for completion?
Yeah, sure, Manvi. We actually purchased basically 53% in a local company there which owns a 1.1 acre piece of land. We plan to take our stake up to 74%. The total outlay for Royal Orchid will be in the range of 30 crores for this project in terms of equity. We intend to further utilize debt to complete this hotel. The total outlay for the project should not exceed more than 120 crores. So at this point, keep in mind our joint venture partner will be investing 26% as well. So altogether the project costs about 120 crores. We plan to build a 260 room 4-star hotel under our Royal Orchid Central brand of hotels. This will be well positioned in the Powai market, which will cater to the new upcoming integrated domestic and international airport at Andheri, as well as the upcoming IT hub at Powai.
Step away from Powai, just for investors' interest. How many rooms do you have in the pipeline pan India, and what kind of corresponding investment do you have set aside for it?
Sure. We've actually got 1,100 keys currently. This year, the upcoming fiscal year, we expect to launch about 450 keys under mostly the owned, mostly owned 5-star hotels and one management contract. Going forward, we have a further pipeline of about 300 to 400 keys within our kitty in India. We also have a project in Tanzania and Dar es Salaam where we plan to develop a 150-room resort property.
Right. Keshav, 450 rooms includes this 260-odd new project that you spoke about as well? Or that's separate?
Actually, no, that's separate. We expect this 260-key property to come up in the next fiscal year. So I haven't included for this year. It is included in the additional. So altogether, we have about 850 keys under development. So that's basically the 260 forms part of the actually FY12.
So at the end of FY12, you'll be about what, 1950 odd rooms?
Yeah, that's correct. We'll be about 1950. We also anticipate certain management contracts to be signed between now and then. We have several projects under negotiation, so we anticipate at least 150 to 200 keys to be added from there. So we definitely expect to double in size between now and FY12.
Between these 1950 odd rooms, can you break it up in terms of how many will be purely hotels operated by you? How many of them, if any, will be, under contracts? Could you just outline that for us? This entire inventory by FY12.
Yeah, by FY12, we actually expect about, a little bit more than 40% of our inventory to be owned. Another 10 to 15% under joint ventures. The rest will be under leases and management contracts. So yes, we are going slightly heavier on our assets between now and then, and the primary objective here is to build an asset base for the company to leverage for further expansion post FY12. And also the good news is that since we have made considerable investments into our back end, we'll be able to reap a great portion of the rewards going forward, since a lot of the hotels, the rooms that are coming up are going to be under the owned segment rather than completely under lease or under management contract. But this year we've actually been very successful in pursuing management contracts, which is another model of growth which we are very aggressively going to pursue. We anticipate that this should probably form the bulk of our expansion from FY12 onwards. We expect an 80-20 shift, where 80% of our rooms going forward after FY12 will probably come from management contracts, and 20% will be from the owned category.
Okay, I know you have a busy morning, but two quick numbers. April to June quarter, occupancy levels that you're estimating, and average room rates.
Sure. Yeah, I think the occupancies we're probably going to see it be around 65% for the April to June quarter. Keep in mind that it is off season, but at the same time this is quite a healthy uptick from the year before that. Our ARRs, well, considering that we operate in the 5-star, 4-star, and we have one property in the 3-star space, the ARRs are kind of a blended mix across 8 cities, but the ARR should be approximately 5,000 rupees by the April to June quarter. So we anticipate on a quarter-on-quarter basis, we anticipate that we will actually be up considerably from the previous year.
Okay. Going back to the earlier point about expansion, how is the funding for all of this going to work out? Has most of it been closed? How much do you need?
Well, at this point we've actually got financial closure for all our projects, which are currently underway. We have actually put in a fair bit of equity from the last 2 years of internal accruals. We also went public in Feb 2006, where we raised a considerable amount of cash at that time as well. So all these projects have actually, the equity component has been tied up, and we also have tied up the debt in the last year. So at this point all that remains to be put in is the last amounts of debt for these projects. So the good news is that we do have financial closure for most of the own projects that we are actually developing, and especially all the projects that are coming up this fiscal year.
Okay, right now you do what, 120 odd crores in terms of revenues annually, approximately?
Well, yeah, approximately, that's correct.
So I'm just trying to understand FY12, when most of these projects, 850 additional rooms will be operational. What is that number going to look like? Could you, run us through
look at it is that
some of those numbers?
Well, obviously it's difficult to provide some sort of meaningful guidance sitting where we are now, but it's fair to say that since we are nearly doubling our rooms, and in fact more than doubling, considering we are adding most of the rooms that we are adding will be owned by us, and therefore we don't have to make any lease payments, or we don't only earn marginal fees. We will be capturing all that value. So it's fair to say that we will expect, well, considering we're doubling the keys, hopefully the revenue should also go in that sort of trajectory.
Keshav, 50% of the total inventory of 1950 will be management contracts, right? So those are under leases. Post-expansion.
No, we expect
that's
about.
What you said.
Well, I actually mentioned approximately 45% will be under leased or management contract by that point of time. But at least 50 to 60% will be owned, all under joint ventures.
Right, fair enough. 40, 10, 50, around that much. Okay, fair enough. We'll leave it at that, Keshav. Appreciate your time this morning here on NDTV Profit. Good speaking with you. Good luck with your plans, big plans in terms of adding capacity over the next 2 years or so. Pretty much doubling the capacity room inventory by the end of fiscal 2012. We'll take a quick commercial break.